What if I told you that the prediction we made right here on Smart Stock Sam, the one where we called $200 not as a ceiling but as a launchpad, just played out almost dollar for dollar in real time? Welcome back, everyone. This is Smart Stock Sam, where we do not chase the news, we get ahead of it. What you are about to see is not a new call. It is a confirmed one. The bull run on Nvidia is not slowing down. It is accelerating. Today, we are going to break down every reason why the revised price targets for NVDA are not just higher. They are arriving far sooner than Wall Street originally expected. We will walk through the technical gates we called in advance, the golden cross signal that triggered billions in institutional buying, the fundamental proof that silenced every critic, and then we will talk about exactly where this stock goes from here. So stay with me all the way to the end, because the most important catalyst is coming in the third quarter of 2026, and most investors do not even know it exists yet. Let's start with the moment that made history. On April 27, 2026, Nvidia became the first company in human history to cross a $5 trillion market capitalization. 5 trillion, not billion, trillion. To put that into perspective, you could buy every single NFL team, every NBA franchise, and every Major League Baseball team, and you would still have trillions left over. This is a number that has never existed before in the context of a single publicly traded company. The stock hit an all-time intraday high of $217.57, and it closed that session at $216.83. While the rest of the financial media was busy writing breathless headlines about whether this was a bubble about to pop, the data was telling a completely different story. This is what separates the Smart Stock Sam community from the noise. We do not react. We read the setup in advance, and then we let the market confirm it for us. And confirm it did. Now let us go back and look at exactly how we got here, because the path to 5 trillion was not random. On April 20th, we identified $200 not as an exhaustion point, but as the base camp for a major breakout. That is a critical distinction. Many traders look at a round number like 200 and assume the stock will take a breather. We looked at the structure underneath it, the accumulation pattern, the volume profile, the institutional positioning, and we said this is where the real move begins. So what happened next? Nvidia cleared Gate 1 at $207 on April 24th. It did not grind through it. It did not hesitate. It decisively broke through. And then, almost immediately, it gapped right through Gate 2 at $212 without even pausing to consolidate. This gapping behavior is one of the most bullish signs you can see in any stock at any market cap. It means the buyers are so aggressive, so determined, that they are not waiting for a pullback. They are paying whatever price it takes to get in. That is the behavior of institutional money that has made a decision and is executing on it at scale. But here's the question every smart investor has to ask. What triggered that institutional decision? Why now? Why this aggressive? The answer lies in a technical signal that has a nearly perfect historical track record. We are talking about the golden cross. The 50-day simple moving average just sliced through the 200-day moving average on the Nvidia chart. In the world of quantitative finance and algorithmic trading, this is not just a signal, it is a trigger. The moment that cross is confirmed, the automated buying systems at the world's largest hedge funds, pension funds, and asset managers receive their green light. The result was something we have not seen from this company since the 20th century. 11 or more consecutive winning sessions, 11 straight days without a single red close while setting all-time highs. Do you understand how extraordinary that is? Can you name another company in the history of the modern stock market that has sustained that kind of winning streak at a $5 trillion valuation? Think about that. Now, the technicals tell us the how, but the fundamentals tell us the why. On April 24th, we received proof so powerful that it effectively ended the debate about whether AI infrastructure spending was real or experimental. Intel reported blowout earnings with a massive surge in their data center division. If Intel, a company not even in the same league as Nvidia when it comes to AI chip dominance, is seeing that kind of demand, then Nvidia is sitting on something that most people have not fully priced in. Intel's results acted as a sector-wide confirmation signal. AI infrastructure spending is not a phase, it is not a cycle. It is a structural, permanent shift in how the global economy operates. That is the foundation that allowed Nvidia to decouple from the rest of the technology sector and launch into this historic orbit. And when you look at the actual numbers underneath the hood, the picture becomes almost surreal. Nvidia is currently operating with a net margin of 55.6%, 55.5 cents of profit for every single dollar of revenue. Their closest rival, AMD, is running at around 20%. That means Nvidia is generating profit at nearly 3 times the efficiency of their most comparable competitor. But the number that truly floored analysts this cycle is the backlog figure, $1 trillion in confirmed orders extending through 2027. That is not projected revenue. That is not potential revenue. Those are signed, committed contracts already on the books. $1 trillion, guaranteed. And yet, despite all of this, the PEG ratio, which measures how expensive a stock is relative to its growth rate, is sitting at somewhere between 0.66 and 0.69. Any PEG ratio below 1.0 is technically classified as undervalued. We are looking at a $5 trillion company that, by one of the most reliable valuation metrics in finance, is still cheap. Is that the kind of contradiction that keeps you up at night? It should. Now here is where the story gets even more compelling. For 2 years, the Nvidia narrative was entirely about the data center, server farms, hyperscalers, cloud providers. But a new frontier is opening up, and it will multiply the total addressable market in a way that even the most optimistic bulls have not fully modeled. Fresh reports are emerging about OpenAI working with Qualcomm on artificial intelligence-first smartphones. AI is moving out of giant server rooms and into the pocket of every person on Earth. Billions of devices, billions of users, all requiring the computational infrastructure that Nvidia is uniquely positioned to provide. Add the Google Cloud partnership for the Vera Rubin platforms, and you begin to see that Nvidia is not positioning itself as a hardware company. It is positioning itself as the operating system of the entire artificial intelligence economy. The price action of the last 2 trading sessions tells you everything about current supply and demand dynamics. On Friday, April 24th, the stock jumped over 4.3% in a single session, crossing that historic $5 trillion threshold for the first time. And then on Monday, April 27th, instead of pulling back, Nvidia surged another 4% on mobile AI expansion news and hit that intraday peak of $217.57. 2 massive up days in a row at a $5 trillion market cap. When a company of this size moves that aggressively twice in a row, it signals a supply and demand imbalance at the institutional level. There are more large buyers who want in than available shares to absorb their orders. That is historically one of the most reliable preconditions for a parabolic move. So what does Wall Street actually think? The consensus is a unanimous strong buy. Bank of America has a price target of $300, citing massive free cash flow projected to fuel increased dividends and buybacks. HSBC is at $310. Tigris Financial is leading the charge at $360. These are grounded in the projection that Nvidia will generate over $400 billion in free cash flow over the next 2 years. Nvidia is transitioning from a pure hyper-growth play into a total return investment, combining explosive capital appreciation with the safety of a fortress balance sheet. That combination is rare and powerful. Now let us address the one thing skeptics always bring up: insider selling. Yes, insiders sold nearly 953,000 shares in the last 90 days. But here is the context. When personal net worth increases by hundreds of millions, diversification is rational. What matters far more is what professional money is doing at scale. Institutional investors currently own over 65.27% of all outstanding Nvidia shares. For every share an executive sells, institutions are absorbing thousands. The market is digesting these insider sales with zero friction. If insiders truly believed something was wrong, the stock would not be setting all-time highs every single day. The options market is telling the same story. The put-call ratio sits at 0.37. For every single person betting Nvidia goes down, nearly 3 people are betting it goes higher. Short interest has collapsed to just 1.21% of the float. Short sellers have essentially surrendered, and the open interest concentrated around the May 1st expiration shows massive call volume at the $210 and $215 levels. These function as price floors. If the stock dips, the mechanics of these options positions generate automatic buying pressure that supports the price. The market itself is structurally engineered to hold these levels. So what does a disciplined entry look like right now? The RSI is signaling short-term overbought conditions. That is honest. If you are a disciplined investor, the optimal entry zone is between $210 and $212.50. We want to see a retest of those former resistance levels converting into new support. The primary support floor sits at $207.50, and the foundational pivot, the line in the sand that defines the entire bull thesis, is still at $195. As long as Nvidia holds above $195, the bull case is not just intact, it is dominant. The near-term target is $220, which represents both a psychological level and a significant area of options resistance. Above that, we enter the blue sky zone between $225 and $230. And the 12-month institutional target, now supported by the accelerated momentum we have seen, sits firmly between $275 and $300. Based on the timeline compression we witnessed this past week, I would not be surprised to see those institutional targets reached significantly ahead of schedule. The engine driving all of this is the confluence of 3 forces that almost never align simultaneously: structural demand from a $1 trillion backlog, financial efficiency with over 55% net margins, and institutional alignment with 65% ownership. Together, these 3 pillars remove almost all the friction from the path to a $6 trillion valuation. We are no longer debating whether Nvidia will grow. We are simply calculating the speed at which it will happen. And the fuel for the next leg? First, the $260 million deal with Axe Compute for over 2,300 GPUs, a powerful signal of continued enterprise adoption. But the holy grail, the catalyst that most investors are sleeping on, arrives in the 3rd quarter of 2026, the Vera Rubin architecture. This is Nvidia's next-generation platform, and it is designed to extend their hardware dominance for years beyond the current product cycle. When Vera Rubin hits the market, every major data center operator, every cloud provider, and every AI laboratory on Earth will be placing orders. That is not speculation. That is the natural consequence of what Nvidia has built. Before I give you my final verdict, I need to take a moment for an important reminder. Everything discussed in this video is for educational and informational purposes only. Nothing here constitutes financial advice, investment advice, or a recommendation to buy or sell any security. Investing in stocks involves significant risk, including the possible loss of principal. Always do your own research and consult with a qualified financial professional before making any investment decisions. Past performance and past predictions, no matter how accurate, do not guarantee future results. Now the bottom line. The April 20th analysis on this channel was precisely timed, and the momentum we are witnessing right now is not froth. It carries undeniable structural support. $200 was not the peak. It was the Launchpad. Those institutional targets of $275 to $300 are no longer long-term dreams. They are highly probable outcomes on a compressed timeline. Nvidia is not just a stock anymore. It is the foundational infrastructure of the artificial intelligence era, and we are watching history be written in real time. Here is the question I want you to think about and answer in the comments below. If Nvidia reaches $300 before the end of 2026, do you believe that will finally silence the bubble critics, or will they just move the goalposts again? Drop your answer down there. I read every single one, and I genuinely want to know what this community thinks. If this video gave you an edge today, please give it a like. It takes 2 seconds, and it genuinely helps this channel reach more investors who deserve access to this kind of analysis. If you are not subscribed yet, hit that button right now, because we have another major catalyst breakdown coming very soon that you absolutely cannot afford to miss. And if you want to go one step further and support Smart Stock Sam directly, you can send a super thanks using YouTube's built-in support feature right below this video. Every single contribution helps us invest more time and resources into the research that keeps this community ahead of the market. Stay disciplined, protect your levels, and I will see you in the next one.